Big Fed meeting yesterday and record number of deals falling apart in June. Let's talk about it on Today in Mortgages. Hey, what's up, Dreammakers? Welcome back to the show. We're talking about what's real, what's hype, and what you should actually be paying attention to out there in the world of mortgage and real estate news. It's Today in Mortgage. Rich, we had a big Fed meeting the last couple of days, and Jerome Powell had his speech yesterday. Everyone probably has already heard the news, but Rich, what came out of that yesterday?
They're sticking with what's working. Yeah, just holding steady on the plan because they're seeing everything they want to see.
Yeah, we saw a lot of language out of Jerome Powell yesterday saying we're getting good indicators, good news. We're seeing what we want to see, like you just said. But he also used his age-old line, kind of wait and see, and we're waiting on more data. But in general, it felt like we're almost there. Like there was a lot of things that he said that felt like we're really close. What did you think?
Yeah, of course. I feel like he wanted to say we're going to be cutting in September. Honestly, I just, by the way, he had to stick to his notes when answering the question because I think he was concerned he would, give too much positivity away. But, things are just trending. They make decisions based on trends, where we're going, where they see things happening, and they clearly see inflation coming down closer to the target.
I think at one point he actually said we don't need to worry about inflation anymore. And it really does feel like we are real close to that. He wants to say it. It feels right, Rich. It just feels
It does
right.
feel
I think
right.
you're right. This couldn't come a minute too soon. We got an article from redfin.com that we're going to look at today. Cold feet, buyers backed out of deals at record rate in June as home prices hit all-time highs. So, Rich, in this article, it kind of talks through a couple of different stats. The kind of headline one is that it was 15% of homes that went under contract in June were canceled. And so those purchases were canceled. And that was kind of a June record.
Yeah, I don't know. I mean, I don't see that as a real big deal because cancellations are happening for a lot of reasons. Like, just think about the inventory. There's not a lot of inventory, but maybe the inventory out there requires a lot of work. The homes need repairs. They don't know that when they're making the offer. So they have their inspectors come in and find out needs a lot of repairs. That's why it's been on the market, that kind of thing. And the buyer can't afford to make the repairs. The seller may not be willing to make the repairs. So, transaction canceled. Also, what happens, it's hard to qualify right now. And it highlighted some markets, but every market has the same issue. Real estate taxes are a lot higher than they were. Homeowners insurance is a lot higher than they were. And that just it snowballs because once you get higher taxes, higher homeowners insurance, that may boost your debt to income ratio above 45%, which means now you have higher mortgage insurance premium if you're putting less than 20% down. So it just snowballs, and pretty soon you can no longer afford it when you thought you could when you made the offer. So that's a lot of the cancellations also.
Yeah, and it's interesting. If you look at the graph, they have a graph in here and it shows, obviously it's saying, hey, this is a really high number for June. But if you go back just several months, the number was much higher. And historically, that is not an abnormal number. It is just slightly above average. So the other thing that it talked about in here, Rich, was 20% of homes for sale in the last month had a price cut. And I think a lot of the same reasons you're talking about. But anything else in that stat that you want to highlight?
Yeah, I mean, 20% of the sellers are willing to concede, are willing to lower their list price or their, what they initially listed. Maybe they're low in the price, so more borrowers can qualify because there is the affordability issue that's haunting us today. But the bigger piece there that everybody's overlooking, 35% of all homes are still sold over list price. Like, I don't know why the article's not talking about that. I mean, honestly, it's still very competitive out there. The article also said we got a 4% year over year, June to June from last year, 4% increase in home prices. It's what you and I have been saying. I mean, the data is telling us, we're just out here parroting it, but that it's happening. The home prices just keep rising. Yeah, we get some more cancellations and whatever. Doesn't matter. There's just not enough inventory for the demand.
There is a chart in here as well. We'll throw that up on the screen with U.S. home prices hitting an all-time high in June as well. And so we're pretty close to that $450,000 mark. So I think this really is kind of a tale of two different home economies. And what it says in here, what you've said, is that buyers are just a little bit more picky right now. They have to be. They're making a really big purchase. A lot of the inventory out there is maybe not great inventory, and they want to get into a home that they're going to pay that much money. It's not going to be maybe that starter home go up in a couple of years. It's going to be, this is a long-term play.
Sure is. The prices are not coming down. Yes, there might be a small period where they do in some markets, but at the end of the day, you're not buying a home for a 12-month, occupancy. You're buying a home for your family to grow up in. You're going to likely own that home for 5, 10, 15, some 30 years. So the value just keeps increasing. That's what we should be taking from this article. Homes are still sold over list price, 35% of them, and the values just keep climbing.
And while it hurts to see some of those contracts falling apart in June, especially for all the loan officers out there who put a lot of work on the front end of those things, we're talking about rate cuts. We're seeing Jerome Powell out there kind of saying but not saying September's coming, but home prices is still going to be high. So if you can do it now,
do it.
Now is the right time.
Yeah, do it. If you qualify, go do it. I mean, the best case is that you get to refinance out of whatever rate you get today if rates go down significantly. I just think, things climb a lot faster than they fall. So when it comes to interest rates, you're going to see a quick, boom, interest rates up, but they always fall slowly. So make a decision based on your qualifications today, knowing home prices keep rising, and then refinance down the road. I mean, this has kind of been, I know it's boring to hear over and over from us, but you can't argue with the data.
You certainly can't, Rich, and that's how we should be talking to our borrowers, our buyers about this situation. If they're waiting and see if they're on the fence, it's not the right place to be. So, Rich, I think we're going to leave it at that. Good news out of the Fed today, pretty much exactly what we predicted, exactly what you expected. Rich, well, thank you so much for helping us make sense of all this today. We appreciate you. I appreciate everyone out there watching and listening. Until next time, we'll see you on Today in Mortgages. Today in Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and/or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.